Hey everyone, this is Vicky from Group 12. Today we are bringing you the video presentation on our research topic. Take a look at today's agenda. By the end of this session, you will have an insight into what our topic is about, the literature review, the data description, the methodology, and also how we are going to do the data analysis. So let's kick off with the introduction. We were inspired by one of the hottest discussion topics in September, which is the banning of WeChat and TikTok in America. This ban is an unprecedented action by the US that further reveals the sharply degenerating relationship between China and the USA. We were interested to see how this ban will affect the stock market volatility of America. 2020 has been a year full of surprises and turbulence, as we can see in the ABCs of US and China's deteriorating relationship. There were accusations of China threatening USA's national security. Next, Huawei was banned, which triggered unhappiness among the Chinese people. Lastly, the coronavirus outbreak, which greatly affected USA, caused the relationship to worsen. The banning of WeChat and TikTok further worsens the problem and caused troubles for many businesses directly, which can cause lots of volatility in the stock market. As we can see, even back in 2019, TikTok penetration in USA already reached 12%. In 2020, when everyone is stuck in quarantine, TikTok's penetration will likely be much higher. Not only that, the banning of WeChat is affecting not just normal people, but lots of businesses. We can see that in 2020, WeChat users around the world already reached nearly 1,250 million. WeChat is not only used for communication, it is also a vital business tool that can receive and send payment. According to American Chambers survey, 88% business owners said banning WeChat will negatively impact operations, 56% said that business will be less competitive, and 41% said that it will have negative impact on revenue. This ban will likely affect many big American businesses that establish their subsidiaries in China or rely on China for revenue and also outsource their manufacturing processes to China. All in all, for this topic, we have two objectives. First, we want to examine the stock market's volatility in pre, during, and post TikTok and WeChat ban using the log return of 10 stocks in the USA stock market and also several macroeconomic variables simultaneously. Our second objective is to expand the debate on regulatory control factor in determining the stock market volatility simultaneously with other common macroeconomic factors. Now, I will pass on to Shihao for literature review.
Let's move on to section 2, literature review part. According to Bernstein, an analyst Tony Skolnaki's research, it says that China contributes about 50% revenue of Apple and Tesla company. Apple sources almost all products in China, and Tesla is trying to generate 30% revenue from China since Shanghai Gigafactory was constructed. Even if there's no current signal of potential risk of China which would affect the stock prices of two companies, China could make it realized if it made the effort. If WeChat is finally banned on iOS, it is estimated that there will be a sharp decrease in hardware sales in its market. For Tesla company, it has maintained a warm relationship with China for a long time, as the Chinese government likely regards Tesla as an essential part to its own vehicle electrification program. And in 2014, China delayed the release of the iPhone 6 for 1 month, reportedly due to the US indictment of several Chinese military hackers. On Tuesday, Apple stock fell 3% to $437.50, while Tesla decreased by 3.1% to $1,374.39. The S&P 500 closed down 0.8%. In another article based on Bomfim's evidence, US stock return response reliably to macroeconomic information and monetary policy. Furthermore, according to researches made by Omichin et al. In 2017 and Lagia and Zingales in 1998, positive correlation exists between stock market volatility and institutional quality country-level governance mechanisms and macro variables. Therefore, generally speaking, the policy set by a country might have a specific effect on its market volatility. And Harry is going to introduce the data description part.
This is Ray Hong. I'm going to talk about data description. We use 10 stock market data from the information technology industry. These 10 companies are selected by the market cap and the industry, including Apple, Facebook, Microsoft, IBM, Qualcomm, Nvidia, Line, Twitter, Uber, and RingCentral. Facebook and Microsoft are participating in this event. After the banning is announced, these two companies tried to acquire TikTok. Moreover, Facebook, Skype, Twitter, and Line are the competitors to WeChat. These apps all belong to communication software. The institutional quality country-level governance indicators used in this analysis include government effectiveness, regulatory control, and the rule of law. Government effectiveness is a combined indicator for the quality of public service provision, bureaucracy, and independence of civil service from political pressures. It is an important indicator of our study because it includes the quality of information provision and the independence of government agencies. Regulatory control mainly focuses on price stability, bank supervision, foreign trade, and business development in a country. It also includes the quality of regulations and investor protection rights, which is an important factor for determining the country compliance with the government indicators. The rule of law measures the incidence of crime, effectiveness, predictability of a judiciary system, and the enforceability of contracts within a country. These indicators are measured in units ranging from negative 2.5 to positive 2.5. Higher values correspond to better governance outcome and institutional quality. The analysis employed GDP per capita and the regulatory control as determinant factors of the stock market volatility. And EMP, which is unemployment rate, is also employed. This data for the cross-sectional analysis are collected from the World Bank and IMF database. This report also used the VIX to analyze the volatility of the stock market. Sentiment plays a significant role in decision-making for the stock market. Therefore, it could be a good idea to glance at the VIX. The Corporate Volatility Index is a measure of expected price fluctuations in the S&P 500 index options over the next 30 days. The predictive nature of the VIX makes it a measure of implied volatility. It is not one that is based on historical data or statistical analysis. The time period of the prediction also narrows an outlook to the near term. The VIX is considered a reflection of investor sentiment, but it's a leading indicator, which means that it should not be construed as a sign of immediate market movement. Now let's pass to Xieling for model and
We
methodology.
have applied three models in this research. The first model is the volatility model. Econometric modeling of the volatility clustering is a very active area of the research in the finance literature in recent years. We use the empirical standard volatility model to determine the market-wide historical volatility adopted by James. So how can we do it? The above procedure gives the best estimates of the volatility that can be obtained from the available price data. This number then becomes the forecast for the volatility goes forward over a time horizon of any length. The second model is the panel data model. The research will use several independent variables which collect from different fields to explain the stock market volatility before and after government banning the TikTok and WeChat. The purpose of this model is to find out whether the government banning the TikTok and WeChat is a real factor that caused high volatility in American stock market. We employ the follow multi-variable regression model to analyze stock market volatility for USA. VOLT is the share market volatility for USA at time t. CON is the regulatory control. GDP is the gross domestic product per capita. EMP is the unemployment rate. LAW is the rule of the law. GFE is the government effectiveness. The third model is the Gash model. The Gash model was introduced by the Boleslav and Taylor. The model allows the conditional variable to determine on the privileges. Compared to the ARCH, the Gash model allows both for the longer memory and a more flexible lag structure. The Gash 1-1 model is as follows. The similar Gash model assumes that the volatility response to positive and negative shock is symmetry. Now I will let my friend to explain to you the test of the model, of the piece model.
According to the data analysis section, we are going to use some model and hypothesis test. The first hypothesis of our paper assumes that the stock market time series data have a constant unit root. We use augmented Dickey-Fuller test statistics to determine the critical value of the unit root using trendline and constant. According to the 8F test statistics conditions, if the absolute test value is larger than the critical value, then the null hypothesis should be rejected and the alternative hypothesis should be accepted. If the test statistics are less than the critical value, we need to accept the null hypothesis. Then we will use the correlation coefficient matrix to summarize the correlation between different factors. In the process of analyzing panel data, we first use the ordinary least square model. It is a method to find the best function match of data by minimizing the sum of squares of errors, so that unknown data can be obtained easily and the sum of squares of error between the obtained data and actual data can be minimized. The least square method is the most commonly used method to solve the curve fitting problem. The usual linear regression assumptions are still applicable in this method, which are linear model, zero conditional mean, homostaticity, and error independence. In addition to individual significance and combinatorial significance, we will look at AIC, BIC, and adjust R squared to determine which variables are required. Finally, we will use the Persich-Pagan test to identify heterostaticity in OLS. However, since the OLS model may have unobservable heterogeneity problem and only treat data as cross-section, ignoring the panel structure, the result obtained by using the least square method may be biased and false. In order to solve this problem, the fixed effect model is adopted in this study to determine the volatility of the stock market and its influence on variables at the national level. At the end of this analysis, robustness tests will be carried out to investigate whether the evaluation method and indicators still maintain a relative consistent and stable interpretation of the evaluation result when some factors are changed. Robustness test is to change a specific parameter and carry out repeat experiments to observe whether the empirical results change with the change of parameter setting. If the results find that the symbol and significance change, indicating that it is not robust. This is all of our presentation. Thanks for watching.